In this next video, I want to talk about trade plans, and we'll do some walkthroughs and just kind of take a few of the simple trade plans and just walk through as if we're approaching each session the same, day after day, how we're going to do these trade plans. You should never trade without one. As you know, that's one of the key principles. There may be markets that you're going to want to explore and create your own trade plan. One of the things I want to recommend is if you're creating a day trade plan and maybe you're looking at Forex, or maybe you even want to do something like trade a stock symbol and flip some options, or just a futures chart that you don't see on the website, maybe a different time frame. You want to think in terms of getting your trading done as quickly as possible. So always work in power of quitting. Power of quitting says that you get positive and then you quit. Now there's a couple different power of quitting options that I like when I'm day trading futures. The Russell, crude oil, the Dow E-mini, for example, maybe some others. And the way I've been testing my own plans is that if it hits target 2 or gets to within one tick of target 2, then that's a full winner. And if it happens on the first trade, I'm done, as long as I'm positive. Another thing is that if I get 2 trades that get to target 1 but don't get to target 2, okay, 2 trades that get to target 1, if they're positive, that to me is power of quitting. I'll quit. And then I combine that with a maximum number of trades. And I've found that either 4 or 5 trades total is usually good. A lot of times you'll get it done in the very first trade. To me, I think that's just a smart way to trade because you limit your drawdown. Worst case scenario is you could lose 4 trades in a row. Every now and then that'll happen. It's very rare, but it could happen. It does happen. With Forex, if you're using a 5-minute chart or a 15-minute chart, you're going to trade less. With a 15-minute chart, you're going to take 1 to 3 trades total. And if you get power of quitting on the first trade, you're done. And we'll look at some examples. A 5-minute chart, maybe you take up to 4 trades total. Sometimes you're going to find, and I'm jumping back and forth, but with futures, you might have a losing session where you get 4 losing trades in a row type of thing, and it's just a really bad session. Okay, that'll happen every now and then. You're going to find if you came back and traded another session later that day, later in the morning, different start time, whole new power of quitting, usually you're going to catch nice trades and win. When the market is really tough early on, it could open up and you capture big trades later. You're going to discover this. A lot depends on your market. So you could have trade plans that only isolate certain segments of time. You might have a session that's just the first hour, hour and a half. That one's finished. Win or lose. Maybe you have 3 trades tops. And then you come back a half hour later, start another 1 or 2 hours worth of trading with a brand new power of quitting and everything. There's so many ways you can go. If you're exploring a brand new market, you just got to start clicking through the charts and look and see if you're going to win more than you're going to lose. It's really easy. Just keep count on a piece of paper, a win column, a loss column, and a break-even column, and just count sessions, right? Well, I won this session, won that session. You're going to find that you're going to win most of the sessions on most markets that are worth trading. You just can't get caught up on the few sessions that are going to lose. Some sessions will lose, but a lot more are going to win, and you got to be okay with that. So I thought now might be a good idea to just walk through some examples. All right, so let's start beginning with the Russell E-mini. Now with this trade plan, you can trade to target 1, target 2, target 3, and trail. So obviously you're not going to start out with a 4-position approach. So one way you might want to do it is just trade to target 1 and build your account up. And when you build your account up, add another position and trade to target 2. Build your account up more and then add a target 3, and then you could ultimately add a 4th target or a trailer. Or you could just trade to the target 1.25. That's another good idea. Or you can just trade to target 2. Okay? You could also have something that's a little bit adjustable depending on the size of the trade. None of those options are bad. They're all good. You're just going to have to decide on what you're most comfortable with. The closer the target, the higher the winning percentage. So let's just assume we're looking at all three targets and the trailer. We're just trying to test and get an idea. All right, and so this starts right at 9:30, and we can get in sync with a trade that's already triggered in, or you might decide, no, I don't want to get in sync. I want to just wait for a fresh setup. And again, either one is a good way to go. So let's pretend we're getting in sync. If an earlier trade happens, if it hasn't hit money management, and it hasn't hit the stop, then we can get in sync with the entry. So here we are at 8:30. We're still waiting for 9:30, 8:50, coming close to our start time, 9:26. And you have to ask yourself, first of all, that's a really large trade, right? It's over nearly 7 points of risk. Target 1 is already up over 6 points. First of all, we never would have been able to hit the entry. It's in the pre-market. We're not interested. And it's gone a far way, almost to target 1. When I see a big setup in the pre-market like this because of very few bars, I'm going to want to ignore that trade and just look for a new setup. Even though I can get in sync, this is a case where I'm not going to want to get in sync because you've got very little action and extreme size bars based on low volume that are causing these setups. So I'm not really paying attention to that setup. Notice I do not have the 20 SMA on this chart. I don't feel like I need it with the Russell. All right, so instead, I could get a possible short here, but that's not going to give me a trade either. And the reason why is because this set of dots is higher than the two to the left. It would be a counterpunch trade, but the histogram's still in the red. So no setup. So now I'm just waiting, right? It's 9:30, and I get some dots but no setups, and then finally I get a long trade. Now that long setup, am I interested in going long right where it's starting to move lower away, right? It came down, crossed over, paused a little, and now it's gaining steam going down. I don't think I want to get into this trade against the 50 and the 200. You could if it comes up, but you could also make a little bit of an adjustment just to make it push a little further up, okay? And it didn't. It went down instead, and we got a short trade. And that takes 2 bars, but it ultimately triggers in. And that's the trade. That's the first trade of the day. And it ends up being a beautiful winner. Target 1, target 2, target 3. I got trade tracking on, trailing. Last bar to close below is this red bar, and it stops out right there for a really nice trade. Before we continue to the next session, let's just talk about power of quitting. Since we hit target 2 and have a full winner, we're basically finished. We're one and done. And in fact, you may want to approach your day trade markets, your trade plans, where you just take one trade and that's it, win or lose. One trade, win or lose. You can test for that. You can use the UTA, you can test for that, and you're going to find that your equity curve is going to go up, up, up. You're going to be able to control your trading, just one a day, win or lose, and maybe you trade a number of different markets like that. The Russell, crude oil, soybeans, gold, a Forex chart, whatever. And you get multiple trades, but only one per day per market. You could test for that, and you'll see that you'll end up doing very well over time. I mean, certainly there's a lot more really good trades to come. So you could try a power of quitting too. That's another idea, but it's a much more vigorous commitment. Nice trade to the long side. Notice how the price went way below, way more than 100% of the spread between the 50 and the 200. And then the counterpunch, after establishing a big market exhaustion zone, your counterpunch trade produced a really strong winner to the upside. And notice that, of course, in the squeeze zone, following the 50 all the way up, are producing really nice trades. Even the short trade came down and almost hit that first target. But again, you got dots near the 50 EMA on a strong trending market. Those set up really good trades. You can see right here, it zoomed up again. All right. Don't be afraid to trade later in the day. You could test for another start time. So much you can do, and you're going to find that this is just a very versatile strategy. Let's go to the next session. And sometimes trading into the close can be very good too. All right, so now here we are on the 27th, and we got, again, a huge setup from the pre-market, and even in the pre-market, ends up being a great trade, but it's way before our start time, right? So now we're waiting for 9:30. There we are at 9:13, 9:16. Got a short trade into the low of the day, and that's right at 9:30. It closes up here, right? And if it was a minute earlier, would you want to get short here, or would you adjust it a little bit below the low of the day? I think that that's a pretty obvious adjustment. Okay, even if it's a 5 or 6 tick adjustment, you got to be careful, especially when the histogram is deep in the red and turning up. Remember what I said about some of these purple trades. You got to be careful. I don't think you really want to look for a short after this big strong move down deep in the red. You probably want to be thinking long trade unless it can break through and make new lows. This counterpunch trade does end up triggering in down in here, right? You could see it comes down, hits the entry, but it's still too early. But what happens when you get to our start time? Here we are at 9:30, 9:30 and 10 seconds, and it pushes up. And actually you get in sync with this entry because that trade's still valid. And then it pushes up and goes, and it hits your first target, hits your second target, third target, and you're one and done. That little trade right there is a big, nice winner. 17 ticks to the first target, 26 ticks to the second, 36 ticks to the third. Whatever you're trailing, you can see there's a lot of money that can be made just in that one small little trade. Now, of course, I told you there's going to be times when you may not want to get in sync with the trade, especially a big one in the pre-market. But a lot of times those big ones in the pre-market, they actually can work. You just have to decide if that's something you want to do or not. The outcome will typically be good in the end. It'll just be different, and you could always manage the trade for profit if it's gone, a good distance, 20 ticks or more. You could also use the entry and then borrow from targets from a smaller trade that might set up. So, you'll often get these big trades, and notice that big trade here, it works its way down. Made it all the way to that first target finally, you see? So the more you look at charts, the more you'll make a decision if you're going to use those big trades or not. If you're getting in sync when it's coming down in the direction of a trend versus going up opposing a trend, that might make a difference. So assuming that we're not taking the big pre-market trades, because that's kind of what we just talked about a couple sessions ago, wanting to stay consistent, you end up with a setup here at 854, but then you get a brand new setup, and now it's at 930, and that's to go long. You're going against the histogram, but it's a failed swing, so you don't need the histogram. You are going up with the trend. The 50 EMA ascending away from the 200. Is it going to come up and test these highs? Maybe. So that's the trade you would have to take right there. You are in the chop zone, so hopefully it's going to propel out and keep going up because you're going in the direction of the 50 EMA. And so it does trigger in at 1198.7, and then it can't quite get to that first target. You're going to 22 ticks. That target is at 1200.9. It gets as high as 1200.3, so it just doesn't get close enough. We can't move our stops. We have to stay with the trade, and it comes down for a full loss. Now we have a new trade setting up. This is a short trade. It's going to be a failed swing level, and that one triggers in at 932. Triggers in at 1194.7. We're in the chop zone, but we're below the EMA. We're not trading against it, so we can take that trade. Do we want to adjust below the spike right here, which happens to be the low of the day? Well, that's at 1194.3. Our entry is at 1194.7. That's a big 4-tick adjustment if you want to go all the way down. It's actually a 5-tick adjustment because you'd have to go from 0.7 down to 0.2. So that's discretionary. Yeah, you can make a 5-tick adjustment, but you've already got a 54-tick risk. So now you'd be putting on a 59-tick risk. And instead of your reward being 48, it's going to be 5 ticks less. You're taking 5 ticks away from all those targets. So remember what I said, 1 or 2 ticks sometimes, 3 ticks rarely, 4 ticks more rarely, and even 5 ticks more rarely. You've got the trend pushing down. It failed to break higher. There's a good chance that this market's going down. I personally don't like making 5 tick adjustments. Again, it's a style thing, but I'm going to stick to my own style and not make a big 5 tick adjustment right there 2 minutes into the session. So live by your decision. For me, it's getting short at 1194.7, not adjusting all the way down to 1194.2. All right, so it triggers in, and notice that it pushes down, and the very next bar would have went through any adjustment anyway. So that would have just costed you 5 ticks per position. And then it ends up finally starting to move our way. Am I going to get long here and stop and reverse? Well, first of all, I'm in a squeeze zone. You got the 50 pushing down. I'm not going to take a trade up against the 50 EMA. Even if I'm going to make a small adjustment or get around this swing level or ask for extra confirmation, the histogram's still going down. The general rule of thumb for me is when I'm in the squeeze zone, I don't want to go long up against the 50 EMA. I want to stay short. And ultimately it pushes through and it hits that first target, 1189.9. And I like to use forexfactory.com, and I pay attention to the red labeled reports, some of the orange ones. And right at the top of the hour, which is 7 a.m. Pacific time, 10 a.m. Eastern, of course, we're looking at the 29th. And you can see at the 29th, we do have pending home sales. And so on an orange labeled report, you got to make a decision if you want to stand down for that or not. I think that you don't even have to stand down 5 minutes in front. Maybe you just stand down 2 minutes in front. The whole idea is you don't want to take a trade that you cannot manage because of the news release. That's what you have to consider. So we'll be approaching these news releases every day in the live trade room, and you'll get more experience on how to handle them. So we're going to assume we cannot take that trade because of the news release. So unfortunately, we do miss a good winner that probably would have got us our power of quitting. But it's through news, so it's a non-trade. We're just still waiting. And then there's a long trade here. It's 7 minutes after the news release. But again, you're trading into the descending 50 EMA as it's coming down to that apex. This is a low odds trade. It's a trade I'm not really interested in. I want to wait for a trade with better odds. Sometimes these double straddles are going to be good, but I'm wanting to stay in the direction of the 50 EMA at this point for a better, higher odds trade. And it looks like it's going to head lower, and that decision to stay out of that trade was a good one. Now you get a short trade, and we end up with our 3 dots right up on the 2 lines here. That's a really nice sign. That's showing strong resistance. We got a chop situation where we want to trade with the direction of the 50 EMA anyway. This becomes the next trade right there at 10:15. And that gets short at 1188.8. Takes a little heat. Am I going to get long here and stop and reverse? Well, I'm entering into chop, so I'm not going to go against the 50 EMA. It does trigger in and then pushes right down. Even if I was going to get long here and it wasn't in the chop, I would want to make an adjustment. I'm typically going to want to stay short and stay with the direction of my 50 EMA and not stop and reverse. But the chop indicator helps us because we don't ever trade against the 50 when we're in the chop zone. And look at how it just pushes through. You got more dots on the 50 EMA indicating strength. It's crossed over. It's come back up to retest the 50. That's another reason why you don't want to get long here, because you have to anticipate the retest. And odds are it's going to hold and push lower. So that even could be a good setup right there. But we're already in this one. And it's already now pushed down and hit target 1 right there, you see? And depending on how many positions you're trading, that trade to target 1 makes this whole session positive, and it gets the power of quitting. It's only our third trade. And look, it pushes down and hits target 2, almost hits target 3. And remember, I said how that's looking like a really good trade, especially with the dots lining up on the 50 EMA as it's just crossed over, pushing down. And that one ends up hitting its target 1 as well on a really nice sized trade to target 1, you see. But this trade here, the third trade of the day, ends up being our power of quitting trade for the session. Does it hit the third target? Remember, the trailer would be here above the jump line. Pushes lower. It does hit the third target, and it trails down, and we can borrow the trailer from this other setup. Actually, it's from this setup. This is the trailer on the trade we're in, and it comes all the way down to there. Last bar to close below, right there. And that even made more than the third target. Actually, I was looking at the wrong trade, because the trade we're in, the calculator thinks it stopped out up here, and then it started tracking this other trade, which, remember, I told you that looked like a good one too, because of where the dots were. But we didn't get stop and reverse to long here. We stayed with this one. So we're hitting all 3 of these targets and trailing all the way down. All these trades, all 4 of them, end up being full winners to all 3 targets, just by following our lines. And this is one of the markets that I track every session on my UTA spreadsheet. And you can see I put those same trades in here on January 29th. The first trade was a loser. The second trade, the target 1 winner, and then the partial profit due to the trailer. And then this final trade, and it looks like I put in the wrong number here. Let me fix that. That's 10 points off, and it still ends up positive. That's the wrong number. It's supposed to be 1178.8. I accidentally put 1198.8. So let me put 1178.8. That's the exit. And that was a 10-point winner. And these 3 trades produced 22 points. That's tracking 3 targets and a trailer, 4 positions. But it would be similar results if you were going to target 2 and trailing, or just target 2 and target 3. It's still going to be a very positive day. And sometimes losing is good luck for you, because if we won on the first trade, it might have been smaller, who knows, we wouldn't have caught this big huge winner in the end, you see. So just because a trade loses, that's not necessarily bad for the trade system or bad for the trade plan, because the winners that follow could be much bigger and be explosive trades. All right, but notice it only took 3 trades to get to positive. And so you can do a lot with the UTA. When you download the UTA, you're going to want to go through the training, teach you how to backtest with it. We'll be covering that a lot in the live trade room. But I just want to show you the trade performance. This is the Russell going all the way back to the summer of 2014. There's some drawdown, but very little in relationship to how it just keeps going up, 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 up. I mean, from $0 to $100,000 basically in what, 7 months, 7.5 months. Of course, that's with 4 positions, so you have to put it in perspective. But that's not increasing position size as the account grows, and that's something you're going to want to do as well. That's part of money management. We'll talk about those strategies a lot in the live trade room, of course. But the curve would be just zooming way up. So that's why it's so important to follow the steps success guide. You build a log. Now I'm tracking all 3 targets and the trailer, not because I plan on trading a 4-position approach, but because I want to be able to get statistics on each one of these targets and my trailer so that I can make a better decision on how I want to trade the Russell with 1 or 2 or 3 positions, what targets. All right, so I can show my stats. And the stats are very good. You can see it's got a very positive average win to average loss. It's got a really nice winning percentage, almost 72% per trade on the Russell. That's without using the 20 SMA. The daily sessions are winning almost 90%. The weekly sessions just about the same. And if I want to get better detail, I can come down to some of these tabs down here, or I could expand view and look at some of the summary subtotals. So for example, I might want to look at what target 1, target 2, target 3, and trail individually does. And you could see target 1, it's the same winning percentage as target 2 and target 3. That's interesting, don't you think? So maybe I don't even need target 1. Maybe I would eliminate target 1 because I'm winning the same amount to target 2 and target 3, and with a much higher profit factor and a much higher net profit per trade. The trailer is making a little bit more than the 2 targets. So you can go to target 2 and trail. Do you need to go to target 3 when it's almost identical to target 2? Probably not. So a 2-position approach could be target 2 and trail. And you might be thinking, but wait a minute, you said that power of quitting was if you hit 2 target 1s and then you quit. And what if you hit 2 target 1s and only 1 tick and you have to stop out after 2 trades? You only get 1 tick and then 1 tick because you decide you're going to trade to target 2 and trail. But power of quitting is if you hit 2 target 1s. You know what? Okay, so what? So that session you only end up getting 1 tick on each of those trades that goes to target 1. You still quit. You still quit because you're still capturing the trades that produced that equity curve. And it might be saving you from future losses and bigger drawdowns and just over trading. You see, if we look at the setup type like this, we get a different kind of a view. We can see the equity curve for each target and the trailer, but we could also assess the profit factor of each, how many points, what's the average amount of points per session. There's so much you could do with the UTA. Okay, that's why I want you to use it. The other thing is you get this amazing expectation table. Now, we've learned with this table, this is in the pro version of the UTA, that anything in the yellow is going to make you a lot of money. Anything in the green is like having a mint where you can print money. Okay, now we've got an average win-loss ratio of 1.04 and a winning percentage of almost 72. Okay, so we can draw a line from 72 down to the 1. Here's, let's see, let's go like this. Yeah, right there. So, and 1.04 might have even pushed it down into the green a little bit, but it's right here on the border of deep in the yellow and nearly in the green. And that's a very, very profitable trade plan. This expectation table tells us that we could expect this strategy, this trade plan to continue working. That's why it's called an expectation table. It's very powerful. Let's look at one more Russell example. Here we are, and actually that last session was the 28th, not the 29th. Let's look at the 29th now. All right, 9:30, right in here. Pretty big trades here. We're not going to try to get in sync with them. We'll just wait for a fresh setup. And we get a long trade right here. And we are deep in the blue, but we have the elbow and we're pushing up. We're entering the beginning stages of a squeeze zone, and so you have to take that trade. You could decide, since the histogram is rounding, that you don't want to chase this any higher. You might want to wait, but it could end up being a nice big trade that continues up. We really don't know. So you get long at 1177.2. It triggers in, takes a little bit of heat, got a counterpunch short, but we don't want to trade in the direction of the incline on the 50 EMA, right? Comes up again, but it fails to get higher, and then it dives down. Now, it's looking like we should have got short on this trade. And remember, not everything works 100% of the time. We know we don't want to go short into the EMA coming up in the squeeze, what looks like could be a squeeze zone. You have the elbow pushing upwards, okay? But this market's going to be weak and it doesn't have enough to get higher. So here's a case where that idea doesn't work on this trade, and it ends up stopping out on the first trade right here. Notice you have a new counterpunch trade. This bar is coming off of these 3 dots up here because the setup bar, it never set up below the jump line. So these 3 bars closing above the jump line don't cancel this trade. The cancel rules only happen after a setup bar. Okay, so this trade remains valid. And on 1, 2, 3 bars over from that 3rd dot, you get a setup bar. It's a counterpunch trade. It failed to go higher. It's through the 50 EMA. You have the chop indicator, right? So now you're below the 50 EMA. You can trade in the direction of the 50 EMA. Since we're below it, we can trade down. And so that's the new trade. And it's a big trade, so we got to be kind of cautious, but it's a valid setup. And just to show you how I would be either back testing or logging these trades, I erased some of these sessions. That's how I got the date wrong. Okay, so I fixed it. The last date was the 28th. There's your 10-tick winner, your 22-point session. Now I'm putting in the 29th. And there's your first losing trade. Now you got a winning trade. Or another trade. We don't know if it's winning yet, but I just put the entries in on the short side of the spreadsheet. And it pushes down, and it hits that first target. And the stop holds. The jump line holds, and it pushes down, and it hits the second target. And then the stop still holds, and it pushes down, doesn't quite hit the third target. It misses by a small amount. The third target, 1165.4, it gets as low as 1165.6. So it only misses by 2 ticks. I'm not sure if I miss a big target by 2 ticks, I want to let this go all the way up to my stop. I think I'm going to want to be aggressive and take part of that position off. You could either come off at the second target, you can come off right up here around 1166, a little bit above that. That's something you just have to decide. But for the sake of the spreadsheet, I'm just going to follow the stop of the jump line. So I'm going to put in these targets, 1169.4, 1167.4, and then on target 3, that position, I'll put in the exit on the trailer, and of course for the trailer, I'll put in the exit on the trailer. Notice the power boost we got when it came out of that chop zone, hit the green dot here, and then look how it just pushed it, spiked down, and it kept going down from there, which you could see following our high trend. You see how that works? And so I got my targets right here, and I'll go ahead and finish this, putting them in my spreadsheet. 1169.4, 1167.4, and then my trailer at 1167.7. So that's where the third target, 1167.7, exited, and the trailing position also exited. And notice that, yeah, a losing trade and turning around, following all the rules I've taught you thus far, a nice winning trade, and over 6 points net result with the 4 positions. Even if you were only trading one position to the middle target, 3.5 loss, 5.8 winner. A second position, of course, you could see you had nice winners too. So it's relative as to how many positions you're trading. The same principles are going to apply. Like I said, you should be able to get most of these trade plans done within 1 to 4 trades a session, maybe 5 at the most. And then you could decide if you want to trade an additional session later in the day or additional markets. So much flexibility.